Hello traders, welcome back to the Forex Gig, where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about Pivot Point Breakout Strategy, a systematic approach that helps you identify key market turning points and potential breakout opportunities. You will learn how to spot these critical price levels, understand when to enter and exit trades, and implement proper risk management techniques. By the end of this video, you would have a clear understanding of how to use pivot points to enhance your trading decision and develop a structured trading plan. Now, understanding the pivot point breakout strategy. The foundation of this strategy lies in understanding the pivot point mathematical level calculated from the previous day price action. This level acts as potential turning points when price often responds with significant movement. The main pivot point serves as our central reference, while support and resistance level extended below and above creates a framework for our trading decision. As you can see, these are the claim. This is the P level, this is the support one or the S1, this is the R1 or the resistance one. Here is how each level functions. The resistance level above the PP acts as the first ceiling. They act as the first ceiling when price break above the PP. This basically acts as the major resistance traders face. Traders watch out for. The R2 becomes relevant if the R1 breaks. So once the R1 breaks, the R2 becomes relevant. Let's look for a good example. Once the R1 breaks, the R2 becomes relevant if only the R1 breaks, indicating strong bullish momentum. Think of this as layers of selling pressure, each stronger than the last. Look at when the R1 got broken, the R2 was the next area to hold price, but it still broke through the price. Now, let's talk about the support levels below the PP. Talking about support levels below the PP. Let's look for an example quickly. Support levels below the P. Okay, this is a support level below the P. The first support level serves as the first floor below the pivot point. This is where buyers often step in after a decline. The S2 or the support 2 represents a stronger support level, typically tested during more significant down move. This level acts as a layer for buying pressure. The support 2 acts as a layer for buying pressure. When price gets and break through these pivot levels with conviction, it often signals the start of a new price movement. This is where the breakout strategy comes in. You would want to focus on a clean break before above the resistance or below support to confirmed by a candle closure beyond this level. To see a clean break, you have to see price break this. Let's say in case of a support, price has broken this support area. We start from the support 1. Price has broken this support level and it keeps moving down. It has to break and close below in terms of selling pressure. Then if it's for a buying pressure above the PP, it has to break the R1 and close above, or break the R2 to continue to show a continuation of the buying pressure. The effectiveness of this strategy comes from its ability to capture momentum. When price break a pivot level, it typically continues in that direction as more traders join the movement. Think of it as a dam breaking. Once the pressure builds up enough to break them, the flow becomes strong and being sustained. These are examples of when price break a particular level. When price broke the R1, it shows that it's going to continue to break the R2. And once it breaks the R2, it shows it's going to get to the R3. The same with selling pressure. When price broke the S1, it continued to the S2 and it broke to the S3, showing that this is a continuous bearish pressure. Now let's look at how we can implement the strategy effectively. Your chart setup needs to be clean and precise. When your chart setup is clean and precise, you start by applying the pivot point indicator to your daily chart. You can apply it to our daily chart. Let me set my own up. We'll apply it to our daily chart. Most trading platforms often have these indicators to default, so you will need to want to set it to your own standard pivot point option. You can go through our channel to see how to do that. The most reliable signals focus on the 4-hour and the 1-hour time frame. This gives you a perfect balance between seeing the bigger picture and identifying the precise entries. Let's go to our 1-hour time frame. Now here is your specific entry rule for both long and short position. For the long position or for the buying trades, you watch for price to approach the R1. You watch out for price approaching the R1. Once price approach the R1 or R2, your entry trigger should come when the candle close convincingly above either levels. When candle has closed, look at from this example, candle closed convincingly above the R1. It shows that without long wick extending backward, at least it shows that yes, this is a time to enter your buying position. The same with your selling position. When price close strongly below the S1 level or the support 1 level, look at this close, it shows sign for selling pressure. You have to monitor price action around the S1 level to see if price will close below with conviction on that S1 level. You enter the trade and you look for a clean break. Make sure that there are no wicks showing any rejection sign. You put your stop loss. In fact, we have to put our stop loss placement in a crucial level because risk management is the most important thing, one of the most important things of trading. You put your stop loss below the break level, typically 10 to 15 pips above or below the pivot point level. In terms of a selling trade, when you enter with the strong conviction, you put your stop loss above the broken pivot area. Put it here. Let's say price broke it here with conviction, put it above this area. Then in terms of a buying opportunity, when price broke the area with conviction, strong conviction, you can put it at this area, and we put our stop loss just below our resistance or our support area. Our take profit should be aimed or should align with the next pivot level. If you break R1 and target R2, our risk to reward should be at least 1:2. If we break the R1, our next target for profit should be at least the R2. If we break our S1, at least our next target point should be our S2 for take profit, putting in mind that our risk to reward should be a logical area, a place that where we are risking a certain amount, we are making twice or three times what we are able to risk. Risk to reward ratio should be at a balanced site. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your trading experiences. If you found this video helpful, do not forget to like, subscribe and share this video. Turn on your notification bell so that when we post a new video on trading tips and strategy, you wouldn't miss out. Thank you for watching, and I will see you in the next video.